Do you want to be ahead of the game for the latest in arts, music, cuisine, and entertainment across the Middle East's most dynamic capital cities? Al Monitor is proud to launch our City Pulse newsletters, focused exclusively on local news, starting in Riyadh, Dubai, Istanbul, and Doha. Each week, our on-the-ground writers in these cities cover the latest cultural happenings and trends, so you have everything you need to know for the best local experiences. To subscribe for free, go to almonitor.com, that's al-monitor.com, and sign up on our newsletter page.
Welcome back to the Al Monitor Brief. I'm Adam Lucente. Middle Eastern markets rebounded significantly on Thursday on the back of U.S. President Donald Trump pausing some of his tariffs a day earlier. Saudi Arabia's Tadawul All-Share Index surged 3.7%, while indexes in Qatar, Dubai, Egypt, and Israel saw gains between 1.7 and 2.4%. Despite Thursday's gains, the outlook for the region remains unclear amid the U.S. tariff turmoil. Many regional markets experienced big losses last week when Trump first rolled out the sweeping tariffs, as concerns of a trade war scared investors. Though U.S. markets soared on Wednesday following Trump's announcement, the U.S. S&P 500 index fell again on Thursday. The price of Brent crude oil, considered the global benchmark for oil prices, rebounded significantly on Wednesday, but still remains below what many Gulf producers want to see. Brent crude was trading at around $63 a barrel as of 2:30 p.m. Eastern Time on Thursday. Saudi Arabia, for example, needs a price of around $90 a barrel to balance its budget. My guest this week is Al Monitor's senior market research analyst, Sam Wendel. Sam takes us through the outlook for Middle Eastern markets, including how exactly the region's gains and losses compare and are tied to their U.S. counterparts. Hope you enjoy. Sam, welcome back to the Al Monitor Brief.
Thanks for having me.
As you reported, Gulf stock markets had a significant rebound today, as did the exchanges in Israel and Egypt. How tied to U.S. market trends are Gulf and Middle Eastern stock exchanges, and why?
Recently, there's been a clear correlation between U.S. market trends and Gulf and Middle East stock exchanges, but this is also a fairly extraordinary moment of volatility. And, regional markets are also tracking larger global trends here. We saw that over the past week with, regional equities declining alongside other markets worldwide, until President Trump's decision to pause tariffs. Now, local equities have also since, as you mentioned, rallied alongside most other markets globally on April 10th. But for instance, prior to this pause, the S&P 500 fell in the ballpark of 12% over the week prior. But the main index on Saudi Arabia's Tadawul, for instance, fell closer to 6%. So there's clearly some daylight here in between markets. And broadly speaking, local exchanges don't move in lockstep with the U.S. market in more ordinary situations. And a big reason is that the region's outlook is highly dependent on shifts in the oil market. And at the same time, regional stock markets are also far less deep and diverse than America's.
That's a good transition to the next question because we've seen a lot of oil price fluctuations recently. In your view, what is oil's outlook amid the tariff turmoil?
Well, there was a brief spike on April 9th following Trump's decision to pause tariffs, but the emphasis is on brief, and benchmark Brent crude is still trading below, or it's trading closer to $60 a barrel than 70. So that's well below the break-even prices needed for major regional producers to balance their budgets. But more broadly, this ongoing turmoil continues to weigh heavily on oil's outlook, in my view, and especially as the U.S.-China trade spat is still going ahead full speed. And, despite the decision to pause most levies, global growth fears have not abated much since then. So it's still fairly muted for the market.
You wrote that some UAE equities, such as International Holding Company, IHC, and the energy firm TAQA, have been relatively unscathed by the recent global market downturn. Why do you think these companies have fared relatively better?
It's an interesting question, but it should be noted that these stocks, the two that you mentioned, weren't necessarily posting huge gains in 2025. IHC's shares are actually down on the year slightly, and it's actually a good example. The company is kind of unique. It's seen as a somewhat mysterious conglomerate, and it's controlled, I should note, by the UAE's influential national security advisor, Sheikh Tahnoon, who was recently in the U.S. for high-stakes talks with Trump. So, if you track this company, it's It's interesting. Its shares don't usually move in line with other trends. And that's also been the case during this recent volatility. So I know that's not necessarily answering all your questions, but some of these companies are not, going back to the prior question, they don't always move in lockstep with market trends, broader market trends.
Don't go anywhere. We'll be back with Sam Wendel after this short break.
Today's transformation of the Middle East is at the center of global geopolitics. Whether you're an analyst, diplomat, executive, or academic, you need the best reporting and analysis to understand what's really happening on the ground and what it means for the world. Al Monitor is the award-winning independent leader in Middle East news. From Riyadh to Beirut, Abu Dhabi to Doha, and Baghdad to Tehran, our team of over 100 expert journalists report daily on the top stories driving the regional trends. Download our mobile app and subscribe to Al Monitor to follow what leaders and decision makers are reading every day. Go to almonitor.com, that's AL-MONITOR.com, and use promo code POD25, POD25, for a discount.
Okay, we're back. Sam, my last question is about Saudi Arabia specifically. What effects could further losses to the Saudi oil giant Aramco have on the kingdom's development plans?
The oil giant is the prime driver of the kingdom's economy. So, and that's, particularly through its dividends that it pays out to the government and to the public investment fund. So with oil prices, going down, Saudi Arabia could lose out on tens of billions in revenue this year. And that would increasingly jeopardize Aramco's fairly generous dividends. And I believe last month, the company signaled that it was going to cut its dividend payouts by roughly 30% this year. And that's significant. But the big spending kingdom has already sort of expected this, and they've already been borrowing, and we will probably see borrowing loom larger in 2025.
Sam, thanks a lot for your time, and we look forward to more of your reporting and analyses on these topics.
Thanks, Adam.
Thanks for listening to the Al Monitor Brief. Be sure to follow Al Monitor for more on the stories impacting the Middle East. Until next time, I'm Adam Lucente.